welcome to this very special series, Wise with Edelweiss. Joining me today is Radhika Gupta, who's the CEO at Edelweiss Asset Management and one of the most dynamic leaders of the Indian mutual fund industry. Recently, Radhika put out a set of questions which, according to her, all investors should be asking of a mutual fund house before they invest. Now, we thought we'll pose those very questions to Radhika, put her in the hot seat and ask her what her reaction or answers to some of those questions will be. Thanks very much, Radhika. Always a pleasure talking to you. And, the first question that I want to take up with you, which you put out, was performance. What is a definition of a good performance of an AMC and what is the definition of a bad performance? So from an investor's perspective, I should be asking this question, and what is it that I should be looking to hear from an asset management company?
So the reason I put this out, and Vivek, great talking to you as always, is that, ultimately an investor judges a fund by performance, good, bad, everything. But it is very important in any relationship, in any transaction, and any journey to have clear expectations of what you're going to get. Because I really believe a lot of the anxiety that investors face, a lot of the dissatisfaction that comes with funds when it does, is a case of misaligned expectations. So it is very important to ask the fund manager, now, what is your definition of good performance? Let me give you an example. When you invest in an equity fund, and if you asked a fund manager or fund house what their definition of good performance is, chances are they'll say it would be beating my benchmark and it would be doing better than my peers, maybe, the top half of my peer group, something like that. I don't think any asset manager will say, I aspire to be number one. I will give you positive returns even if markets are down 30%. I think this is very important for an investor to know, because then you will know what is realistic and what is not realistic. And then you can have a fair assessment of whether the fund has met those expectations. I think if you go in expecting that the fund will be number one, and that's not the fund manager's objective, or if you go in expecting that the fund is going to give me positive returns when the market is down, and that's not the fund manager's objective, somebody is going to be very, very disappointed in this exercise. So defining what is good performance to you, it's like, when you have a child, it is important to define what success is for that child. Now, if you tell him academic success is success, then, he's not going to focus on sports. So you have to have your goals aligned. And I think that's why I put out this question. And that answer will be different by fund.
Always a pleasure talking to you. Thank you very much, Radhika, for joining me on this special series, and look forward to talking to you soon. Thank you and all the best.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.